Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions.
Hey there, morning everyone. Mondays always have this energy, right? It's like a fresh start, a chance to shake things up and see what lies ahead. So, let's dive into it. Now let's take a quick trip down memory lane for a fun fact. Did you know that the term artificial intelligence actually made its public debut way back in 1956? Yeah, you heard that right. It's been around for quite a while. This name came to light during the Dartmouth Conference, an event where some bright minds gathered to discuss the potential of AI. But hey, let's not dwell too much on the past, because there's plenty happening right now in the world of personal finance, economics, and markets. So buckle up and get ready for some interesting insights, tips, and updates. We've got your Monday covered, and we're excited to kickstart this week together. Let's do this. In some surprising news, the Senate managed to avoid a government shutdown by passing a last-minute spending bill. It's always a relief to see bipartisan cooperation, and this bill received an overwhelming vote of 88-9. We can all breathe a sigh of relief for now, but let's not celebrate too soon. This is just a short-term solution. The bill will only cover a 45-day period until November 17th. So what happens after that? Well, lawmakers will need to come together on Monday to continue working on annual spending bills. The job is far from finished. In the meantime, let's take a look at some global economic news. China's economy seems to be stabilizing as factory activity returns to expansion. This is a positive sign for one of the world's largest economies. On a different note, tensions between India and Canada are not expected to have a significant impact on India. It's always important to monitor these situations and understand their potential implications. In Europe, however, stocks have had a rough quarter, logging their worst performance in a year, with a drop of 2.9%. This serves as a reminder that the global economy can be volatile and unpredictable. On a more positive note, ASEAN, Association of Southeast Asian Nations, is presenting unprecedented growth prospects across all sectors. This is certainly encouraging news for the region. So, while the government narrowly avoided a shutdown, there's still much work to be done. We'll keep an eye on these developments and bring you the latest updates. Stay tuned. So, there's a potential healthcare strike on the horizon. Thousands of healthcare workers at Kaiser Permanente are gearing up to walk off the job if their demands aren't met. They're not messing around either, as the strike could last for 3 whole days. So, what's the problem? Well, it's all about staffing, pay, and guaranteed performance bonuses. These issues have been on the negotiating table for months now. The employees want a hefty 6.5% raise in the first year of their 4-year contract, but Kaiser is holding back, offering only 3%. Now, why is this strike such a big deal? Kaiser Permanente is a major player in the healthcare industry, with facilities in various states. With over 75,000 healthcare workers, this could be the largest healthcare strike in the U.S. While patients may feel the effects of the strike, experts don't believe it will impact the stock market. However, if it drags on into November, things could take a turn for the worse. Some even fear it could lead to a chain reaction of strikes, similar to what we've seen with recent auto strikes and others. In other news, United Airlines pilots are celebrating, as they've just approved a new contract with the possibility of up to 40% raises. Way to go, pilots! On a different note, Citigroup CEO Jane Fraser is noticing some cracks among consumers due to dwindling savings. It's a reminder that not everyone is on solid financial ground right now. Well, folks, it looks like we've reached the end of an era. Netflix is finally saying goodbye to its DVD rental business. Streaming has definitely taken over. Lastly, Apple lovers, rejoice. An iPhone software update is on its way to fix those pesky overheating issues. No more hot hands, folks. So, here's some interesting news for all you cryptocurrency enthusiasts out there. Get ready, because according to Bloomberg ETF analyst James Seifert, we can expect a flood of Ethereum futures ETFs hitting the market starting today, October 2nd. That's right, folks. 9 different ETH-based futures ETFs could potentially be launching very soon. If you're wondering which financial firms are gearing up to issue these Ethereum futures ETFs, well, I've got a list for you. It includes some well-known names like Bitwise and Vanik. However, there are a few potential issuers who haven't submitted updated filings yet. We're talking about Direxion, Roundhill, and Grayscale. Safeart believes that it's possible that they might not bother at all. Now you might be thinking, why the rush? Well, it turns out that the risk of a government shutdown is pushing these companies to launch their ETFs quickly. They want to get ahead of any potential disruptions that may arise. Oh, and one more thing to note. Despite all this hype surrounding Ethereum futures ETFs, the price of Ethereum itself has remained flat. Make of that what you will. Investing in the AI revolution can be an exciting opportunity, but it's important to understand the various options and their associated risks. Let's explore a few options from riskiest to least risky. First, you can choose to invest in individual stocks. This option comes with higher risk, but it can also be quite rewarding. When you invest in individual stocks, you're essentially placing your bets on the future success of a particular company. Some top AI stocks to consider include NVIDIA, Symbotic, and Helix Energy Solutions Group. These stocks have seen significant growth this year, but it may also be wise to explore newer names in the AI space. If you prefer a slightly less risky approach, you can invest in mutual funds or exchange-traded funds, ETFs. These are baskets of stocks managed by professional investors, allowing you to diversify your risk across multiple companies. Investing in technology-focused ETFs can be a good way to tap into the technology sector while minimizing the need for stock-picking skills. Examples of popular technology ETFs include ARK Innovation ETF, ARKK, Vanguard Information Technology ETF, VGT, iShares Core Technology ETF, IYW, and Spider Technology ETF, XLK. When selecting a technology ETF, it's important to align it with your investment goals and risk tolerance. ARKK is more aggressive, focusing on disruptive innovation companies. On the other hand, VGT is more conservative, investing in large-cap technology companies. IYW and XLK fall in the mid-cap range. Additionally, consider the fees associated with each ETF, as they can vary. RKK has an expense ratio of 0.75%, while VGT, IYW, and XLK all have expense ratios of 0.15%. Remember, investing in technology carries volatility and price fluctuations. However, with proper research and risk management, investing in this sector can be rewarding, just as it has been this year. Take the time to understand your options and make informed decisions that align with your financial goals. So let's talk about personal finance, shall we? Here's a great quote to kick things off. Money is only a tool. It will take you wherever you wish, but it will not replace you as the driver. That's a wise insight from Ayn Rand. Think about it like this. Money is a means to an end. It's not the be-all and end-all of our lives. Sure, it can open doors and offer opportunities, but at the end of the day, it's us who decide what to do with it. Imagine money as a car. It's like having a fancy car that can take you to amazing places. But it's up to you to actually get in the driver's seat and steer it in the right direction. You're in control. Money can't make decisions for you or determine your values and goals. It's important to remember that money should serve us, not the other way around. We shouldn't let it define who we are or dictate our happiness. Instead, we should use it wisely to support the life we want to live and the things that truly matter to us. So the next time you think about money, remember Ayn Rand's words. Don't let it replace you as the driver. Use it as a tool to help you get where you want to go in life.
In this episode, we explored the origins of artificial intelligence, discussed the latest in global politics and economic trends, examined the potential healthcare worker strike's impact on the stock market, delved into the upcoming Ethereum futures ETFs, highlighted top AI stocks and technology-focused mutual funds, ETFs for investment opportunities, and learned an important lesson about the true nature of money. Thanks for tuning in to the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.